Hello, today is the 13th of July 2011, and welcome to today's silver update. We'll start off with gold and then transition towards the silver market. Gold is making new nominal all-time highs in fiat currency, and this chart is very similar to the swing line that you may have seen on an Ira Epstein video. And that is, it automatically determines if the market is bullish or bearish. If it's bullish, it will close it in at the highest price for the day. Therefore, this is the high. And if it's bearish, it will find the lowest price. This was the low down in here. Now, normally I'm not a big fan of line charts for the very reason that it doesn't show the highs and the lows and only the closes, and that's like a little pet peeve of mine, but this totally fixes the situation in here. The Fibonacci lines, which are these ones in here, what it does is it takes the last 50 days and it automatically figures out what the 38.2 and the 61.8% retracement is. So therefore, from the March area this starts at, it barely ever went below the Fibonacci line. And when it did, it never stayed down below. In fact, it was hardly ever there when it came back up to this Fibonacci point. Didn't stay there long, didn't take long even to get by this previous resistance level, and now again it's at the previous high, but it has made that of a new high. And one of the things I was mentioning before with palladium and platinum is using Fibonacci analysis is that it's already shown confirmation of going back to its highs, which is pretty decent gains in a long-term time frame. And the way you do that is when you have a confirmed move above this 61.8 level, which you see how you had two ticks above it, or two levels where it closed above it, not closed, sorry, two levels where it got above it because these were highs, and then in here we're having the confirmation, yep, the sellers are not coming into the market. We've now made it to this high. Therefore, when you get a situation where Fibonacci says that you're going to a high or a low because of Fibonacci and you get there, that means all bets are off and you're waiting for whatever to happen. And I mean this in a sense where if you come back down below here and then you're going up towards the resistance level, you're at the status of having increased chances of taking it out. It pretty much becomes a wild card situation from here on in. Okay, so as far as the 10, 20, and 50-day moving averages are concerned, we see the 50-day moving average, which has went below this level. This can be a very, very dangerous situation. And I mean dangerous as in this to be a failed move. Whenever you go below a 50-day moving average like this, you go below it, you have a chance to find resistance here, and you do, and well, you go back lower, but you barely go back lower. Now you're above it. Therefore, having a small move below this area, that's a failed move, which can oftentimes bring fast moves, and I would expect the fast move to get well over 1600 into 1630. And we'll now move on to the silver market. This is a quarter-day chart, and the market's just on fire right now. It's up about 4 or 5% for the day. It's up a couple dollars right now. I don't know offhand too much what it is, but this level did find support at the trend line, as I was mentioning yesterday. It did make a inverted head and shoulders pattern. It has already broken through the neckline, as I was talking about. Therefore, I already did the calculations yesterday. That would give us a move up to the previous high. And by the way, I didn't want to take that off, but I'm done with it anyway. On the smaller side of it. This is now the bigger side of it, which is pretty much this chart in here. And when we take a look at this particular chart now, do we want to come back? Do we want to see resistance at this or support at this level? Well, maybe, but we'll start off with Fibonacci. The high level is roughly at around here. We'll just do ballpark levels. I know I should know the numbers exact, but I don't. 38.83, and the last low, which is about 32.30. We'll do Fibonacci now and see what we can come up with. 38.83 is the approximate high for the market. We'll divide it by the low of 32.3. That gives us the difference of how much the market moved, which was about a 1.2 variant. We'll put this to the power of 38.2% and multiply it again by the low, and this gives us the bottom Fibonacci level of 34 2/3. 34 2/3 is roughly somewhere down below in here. The next Fibonacci level is the 61.8% level. 38.83 again, divided by the 32.30 low, to the power this time of 61.8%, and then we'll multiply it again by the low, and that gives us a level of not 23.99. I did something off there, so we'll redo it again. And that's not going to be the right answer either. It's 1.2, I remember that. So we'll just do 1.8, 1.2 to the power of 618, multiply 32.3, 3615, which is roughly in or around right here. Okay, so what does this tell us now? This tells us that we already had this failed move in here. We've already talked about that. But the significant point was this Fibonacci. There was no confirmed breakout move above here. It was getting close. It was holding above it for a while, unable to get above this high. And it really didn't stay above it for that long, only a few quarters. And then on the sell-off, it came back down, came close, a pierce above Fibonacci, and is now broken through resistance, pretty much showing us a confirmation breakout. What the confirmation tells us is that we're going to this high. Then what I mean by confirmation is that your probability odds are extremely high. Along the way, you can very easily retrace back here, then go back first. Who knows how it's going to get there? Maybe it just shoots right up there. And if it does that, I would expect this area to find resistance in here. Where would I expect it to come back? Well, my first thing would be thinking 38.2 from this low to this high, which would be somewhere in around here. If it, of course, just plummets up to 38 or skyrockets up to the 38 level. And, of course, like I say, if it comes back down to this previous resistance area as support, that would be very bullish too. That level is roughly around $36.80, which was the areas in here as well as in here. Now, as far as getting over previous highs, we've already gotten over this high. It's already now gotten over this high. The next high that's left to play is the one that we're testing now. And there's only one more left within this range, which of course is this one in here. Finally, the volatility that I've been talking about. It's a 4% move right now on this quarter today. This quarter ends at 12 o'clock. It goes from 12 to 6. Therefore, the volatility moves are coming in. I've been stating how this trend has went from really a stage 4 decline and is now starting to go higher, because markets have 4 stages. Stage 1 is sideways, stage 2 uptrend, stage 3 sideways, and stage 4 decline. Therefore, if we look at the stages in here, we have the stage 4 decline, and we go from stage 4 to stage 2 without a stage 1, because there was no settings where it just consolidated like it did in here. We'll get to that one in a second. So it went from stage 4 to stage 2, stage 2 uprise, stage 2 uprise, stage 3, stage 4, stage 1, and now we're moving back into a stage 2 uptrend. This uptrend is for volatility, making moves a lot higher. Alrighty, thank you for watching this particular video, and have yourself a magnificent day. Bye-bye.